Hello and welcome to Pro Trader Strategies Market Commentary for Friday, July the 21st. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having that out of the way, it's a Friday. Generally, we get a lot of economic data. Not so much today, other than if you are in Canada. They did get CPI, came in line with expectations, and core retail sales came in slightly lower than expected. They also revised last month's number down, but that isn't something that is really going to move the markets. We've got crude oil right now off on the day by about 79 cents. As you can see, yesterday we talked about it going up and testing that trend line and has failed. Now back below, it was below the 50 Fibonacci level. Went up there and tested it this morning. Now below the 50-day moving average, looking like it's going to go down there and possibly test at least the 61 Fib level. But I'm looking for it to go down and test that $40 a barrel, blast pretty much right through the 53 handle. So I think it's going to go down and maybe even test this 100% retracement if it keeps, doing what it looks like it wants to do. Although we have kind of three lines here, I don't know. It's going to be a little bit dicey there, but I'm pretty bearish on crude oil at the moment, just by a technical standpoint. So we'll see. I haven't put anything on in regards to that. Gold futures moving higher today. Kind of getting the sense that this debt ceiling thing is going to be the thing that is the catalyst for pushing gold higher, although the equities are off a little bit on the day. I'm a little bit on edge about my DIA, which is a synthetic long. I'm keeping a real short leash on that. Might be pulling the trigger on getting out of that today. It just doesn't seem like it's wanting to come to fruition. Talked about that a little bit yesterday, but the debt ceiling I think is really the issue here on gold futures. They're up nicely today and testing that 50 Fibonacci level, and going to get real comfortable right here at this point of control where the most time and volume has been spent. Anytime it gets too far away from that, that is a magnet, because that's where the most people have bought and sold, and that's where their positions are. So anytime you're not losing money, that is always a comfort, I guess, if you will. Here's the bonds. That's what I was talking about. They're moving higher, and I've been a bit befuddled as to why they're moving higher with the increased interest rates. But at the end of the day, it looks like this whole debt ceiling issue is really the thing that is pushing this higher and causing the curve to kind of invert around that debt ceiling. So we're going to have to keep an eye on that. So traders are basically willing to give up edge to get out of their bonds. So that could become a catalyst for the bonds to move even higher. This is what I was talking about with the Dow Jones off about $47 yesterday. We kind of tested that value area high and kind of started failing. We're making a valiant effort at coming back right now. As you can see off the open, we kind of sold off dramatically, and now we're starting to get a bit of a bounce going on. So we'll have to see. The NASDAQ's not necessarily showing that, but this is a very iffy top, I shouldn't say iffy. This is a classic topping pattern where you got the doji there and then the confirmation to the downside. So the NASDAQ showing a kink in the armor there. E-mini S&Ps, very similar in structure for a technical standpoint. If you are a technical trader, you would definitely be looking at this as a confirmation as a top. So that's why I'm very concerned about my DIA trade. So those two wanting to roll over could easily cause the Dow to roll over as well. This is the E-mini S&Ps on a 30-minute chart. all of the trade besides overnight has been in the lower section below yesterday's value area high, lining up with the previous days. So that is definitely looking like a topping pattern to me. So not really overly excited or bullish on this market right now. So I need to start getting rid of some long deltas and start adding some short deltas. Haven't had that opportunity yet. Trying to get this webinar out to you guys early because I got a full stack of things going on today. I've got 2 webinars going on today. One is with Steve Primo's strategy number 4. Basically, it's a pullback strategy. It's really a good one, especially for longer term traders like myself or swing traders. I don't really look at it necessarily on an intraday basis, but if you look at it on a weekly for trends and things of that nature, especially good for a longer term portfolio. I'm going to be talking about how to implement options around that. Usually he's talking about it as a swing trader buying the stock, and I'm going to go into how you can implement options and lower your margin on trades around the strategy number 4, which is a really good one. So go check that out at Pro Trader Strategies and join us on that. He's doing a 5 or 6 week course, college course on how to do technicals around the market. So check that out. All right, on to a few trades that I have done. Visa is an earnings trade. I tweeted this out yesterday. I was in the July, sold the 95 puts, and originally got those off for 28 cents, bought them back for 2 cents this morning. They beat on earnings by about 2 cents, caused them to spike higher. I was bullish on Visa's earnings because anytime you get that increase in interest rates, they have wider margins, which is going to help their bottom line. So they are now above 100 and are off to the races right now. eBay is another one I thought was hit or miss. It was taking a little bit of heat, believe it or not. People started realizing eBay's competing with Amazon in a sense, which seems a little bit bizarre that people didn't understand that. And it was started falling off yesterday, late in the day. People were throwing those jokes around, but they did come in line with expectations. They've come off a little bit, but it was within the market maker move that I talk about in these earnings webinars. So I talk about how you can figure all that out. I don't have the time to really go into that right now, but having said that, I went into the July that expired today and sold the 34 puts and then the 40 and a half put calls, and collected a credit of 61 cents in there, bought them back for 4 cents. So got out of that one for a nice profit too. So earnings trades going well so far, knock on wood. Lowe's, this is the trade that I talked about yesterday. I was going to have a short leash on. I didn't cover it yesterday, but today on the open it started moving higher. I thought it might want to go down there and hang out. Didn't happen, so I decided to cover this before it started moving higher off of that pullback around Amazon saying that they were going to sell Kenmore washer and dryers and Kenmore brand, which supposedly could hurt Lowe's. But I talked about this yesterday, that there's nobody at Amazon that's going to install these for you, whereas Lowe's has those people that will do that. So I don't think it's really going to compete with them that much. Anyway, so I had on the August 70, I was long the 75 puts and then short the 82 and a half calls on that risk reversal, and originally collected 16 cents for that. I got out for a $2.88 credit. So all day got out for just over $3 on that trade. Nice little trade. Sometimes it's better to be lucky than good, but I had a feeling that if it broke below that 200-day moving average, we were going to want to pull back to that point of control. And believe it or not, even on just some crazy news like Amazon, it went right there and bottomed out right at the point of control. So these market profiles do have magnets, and that's exactly what happened there. It went right down there. The bulls defended that area, and we've now since started bouncing away from that. So that's all I've gotten off today. Like I said, I'm gearing up for this webinar with Primo, which is going to be going off at 1 o'clock Eastern and 10 o'clock Pacific. And then I have another webinar that I'm doing again today with on the straddle with no upside risk. So that's a nice one, especially on a trending one that you think, like with lows, when it's trending sideways. This would have been a good one for next week's webinar, where we're going to be doing straddles with no downside risk. So this is going to be IRA appropriate this week. So check that out. Go to protraderstrategies.com, sign up for that webinar. And if you can't take that, take it easy.